Good afternoon, everybody. Dow Jones Industrial Average. And we have a daily chart. And we had the 2-day reversal here. Then we popped right back up to the highs of the calendar year highs. Then we went straight right back down. And then we've had a 2-day counter rally trend to this major bull top. And how do bull tops start? They start like this, with reversals, and that the down day here was huge, but then the two up days were higher levels than where the reversal level was. It's a counter trend. One thing about price volatility is when it starts this way at highs. One thing that I have told many of the MMTs and the Worldwide Trader Network is specifically on these daily highs now is that when you get these reversals, and a lot of this was Europe, again Italy and other things, and the 2-day up move is when Ben Bernanke was speaking yesterday. That's the Fed chairman, and so they rallied on that off of the bottom, and then today they rallied higher, and it's a counter trend, it's a bull trend. So anytime that you get in major tops and you're overbought in bull cycles, one of the things you want to be very coherent of is where that exhaustion high will come into play. And this is a daily chart, of course, with the 2-day movement, and based on the volatility of the FOMC and people putting to rest the fears that had mounted up is evident where the buy tape or buy sell advanced decline line and everything was working in favor for the bull. But it's a major top, and we did get a blow off top higher than where that reversal was. And in price volatility, when you're on a major bull run high, is that they do have the reversals and they have the counter trends as well. And we look that in the future we're going to have a lot more of the same volatility moving forward in the Dow. I will go to the S&P 500. It has the same setup identically, except it didn't get above the high where the S&P reversal was. So once again, that's just comparing the Dow, but let's go back to the Dow and keep that right here. So the Dow is 30 stocks and a 2-day meeting, and people are trying to put to rest what the Fed may back off. But let us not forget, price volatility at major bull tops have reversals, and they have the math that works the same way in both ways. But the price volatility is still going to get an increase in value of that volatility. The value of intraday movements are going to increase in both the reversal days and the up days. And the bull had come right back in, and they had every reason to. And there's that top. A lot of people need to understand that volatility works this way to the reversal side of a major high. When you couldn't take out the highs, we had to come down and hit that major support level, which goes right back over here where the breakout levels were on a daily level. Once we broke through there, that's your first support level right there, MMT. Now, moving forward on Thursday and Friday, we're going to see where that resistance level comes in and how much of the 2-day rally, counter rally to the selling. We had this 4-day period here, and that Thursday and Friday we're going to see what the Dow is made of. Dow closed above 14,000, 14,075.37. Let us not forget that on the down day it had an up day of 175 points, but look at the down day here. This one here had over 200 and some points on the downside. And what happens in price volatility, you sell down 216 points or so here intraday, but you come back up 175 points in the bull counter rally. But let us not forget that today's intraday rally wasn't higher than this selling rally. They sold it down. The bears were in control here. Now the bulls came back, but they didn't come the same mathematical distance. Once again, it's about price volatility in the Dow Jones. What I would recommend that you do is you do the following, and it's very simple to do. And what is that? You need to go to stockmarketfunding.com. And you need to take a look at the trades we do intraday live, but you need to take a look at the S&P 500 index here, and I'm going to do that next. But you need to get involved in the SMF stock exchange. You need to get involved in the SMF options exchange. We own our own pit, and we give the prices out. We're market makers, and you can go to open an account, and once again, we're going to give you money. A $2,500 account, it's $15,000 intraday. You'll use our entries and exits. The market maker will be giving them out in the live trading room. $5,000 minimum, you get $15,000 intraday to do all of those great trades that we do every day. 15 to 1 buying power. $10,000 account, you get $150,000 intraday. And you will get the limit order that the market maker gives at wholesale prices in equities and options both. And not only that, you won't have the pattern day trading rule ruining you anymore. And you'll be able to get around the retail platforms and be direct to the floor. You can get rid of the headaches you've been dealing with. You can put them to rest. And we hope to see you. Once again, I'm going to conclude price volatility tops in the Dow Jones, overbought, support level, counter rally up. Moving forward, you're going to have a lot more price volatility in all of the indexes.